Sweet, we're live. Happy Saturday, everybody. For those watching the replay, you can skip 4 or 5 minutes ahead. We'll fully start there. Usually let some people trickle in before we start. Also, for whoever does join in and see this, as always, all I ask is for you guys to hit the little like button, and I will greatly appreciate it. In the meantime, we'll hang out for a few minutes until everybody else gets in. Let's bring up my charts. Let me know if you guys can see me and if you can see my screen. Hey, Born, it's been many moons. It's been one whole moon. It's a long time. Add the watermark. All right, let's add the watermark for this class. Where is the watermark? Because I haven't been here in a long time. There we go. Watermark. Ticker, time frame. There we go. YM on the 5-minute time frame. We'll start in about 3 minutes. To make life easier. I'll remember to make sure to have it on when I have these sessions, and I'll go right back to turning it off when we finish up. For those who are just coming in, welcome. We'll start in about 2 minutes. As always, I require at least 50% participation for these classes. That's all I ask. Hit the thumbs up, hit the like button, all that good stuff. I would really appreciate it. And the algorithm is like, cool, people like this. Let's push it out to other people to watch too, so more people can learn. How's everybody's weekend so far? Nice. Welcome, Flashy. Don't think I've ever seen you here. If this is your first time, good to have you. Got a decent crowd. Sweet. Glad to have you with us. Before we start, welcome everybody. This is the Let's Learn with Advent class, Saturday, July 19, 2025. Obviously, my name is Advent, at least if you know me on the internet, or my name is Desi if you know me from somewhere else. This channel, I mainly focus on like trading psychology and building your trading system, but there are also sections for the strategy that I use. And if you're wanting basics, things like that, I pretty much go over a lot of different components of trading. So for those who are new to this specific class, we have this once a month, usually on the third weekend, sometimes on Saturday, sometimes on Sunday, depending on the schedule. But usually we've been doing Saturdays around 8 p.m. Eastern. Seems to work out for everybody else. In these sessions, you can basically ask me whatever you want. Kev, I'm not live in the Discord, but I'll actually get on right now. And I just got on the Discord if you want to join there so we can talk. But yeah, for those who are new here, you're definitely welcome to ask any questions you want. That's basically what this session is. Ask me whatever you want, any struggles you're going over. If you're new to trading, if you're seasoned, but you're still having trouble having consistency, literally whatever you want to go over, we can. And as always, there is nothing such as a dumb question. or anything stupid, you can literally ask me anything. It's all good. Flash, it's in my group that Kev was asking. I'm not in any of the other. I'm in the other discords that you know me from. I'm just not in those live channels. So I just have the YouTube so everybody can just join in one area. It can be, I don't think you can join multiple channels on multiple discords. All right. Cool. So whatever you guys want to go over, put it in the chat and we'll talk about it. And while I wait for those questions, for those who don't know me, I've pretty much been trading for 5 years last month. Been trading, started trading pretty much penny stocks. From there, I got into options, then Forex, crypto, then Forex, and then futures. And right now I'm settling on futures and options, where usually most of my money comes from. All right, let's see. What time frames do you think are the best with the strat? So to me, that's a little subjective in the sense of how you prefer to trade. In the sense of, for myself, I use shorter time frames alongside with bigger time frames for different setups, right? For example, let me get back to my chart here. Usually when I'm trading options, since I trade futures a lot more aggressively and, I'm pretty much paying attention more to futures than I am with options, I'm usually trading options on the 4-hour time frame. So essentially, let's say if tomorrow opens up as an inside bar and then we break the previous high, I'm pretty much going to go long, going to set my alerts, and then go back to looking at futures on my other tab over here. And because it's a 4-hour setup, I'm going to expect it to take some time to pan out fully. So I don't need to babysit the trade. Generally, I usually trade Tesla for options. So that usually is hitting target within 5-10 minutes most of the time. But there isn't really a best setup. Again, it really depends on what you're trying to do, what you prefer, what works best for you, and your trading style and things like that. So it all depends. If I am swing trading, I'm generally going to be looking at the higher time frames. So we're going to be looking at, like the daily, the weekly, the monthly, things like that to look for swing trades, right? Hopefully that answered your question. And then there's other setups that I look for on the lower time frames when I'm day trading or intraday trading, as you would also call it. Hey, welcome, Luckner. Sweet. So one thing that I'll say for you, Flash, if you haven't started journaling yet, highly recommend it. It's going to teach you a lot about yourself and what works best for you and what doesn't. If you're not sure what to journal, you're more than welcome to go to the YouTube channel, just search up journal on my channel, and it'll bring up a class that I had. It's like an hour, hour and a half long, and it goes over the importance of journaling and pretty much my exact journaling process. And you'll discover what works best for you. That's what helped me a lot by journaling. Cool. Let's see. Born mentioned my focus is to flip 5K into 5K in a 2-week window. Is that supposed to be 50K? Because 5K into 5K is break even after 2 weeks. Hey, yeah, welcome. I'll answer your question in a bit. Born, are you trying to say 5,000 into 50,000? Or what was that second number? Gotcha. So you're pretty much trying to double an account in a week. Definitely doable. definitely aggressive. What I would probably say, what you should do is not necessarily focus on turning 5,000 into 10,000 within 2 weeks. When you give yourself a hard cutoff like that when it comes to trading, that'll bring up different issues, right? I've seen it in myself and many other people that I've trained and worked with. So with trading, you don't know if the market is going to even give you setups to double your account in 2 weeks, right? Have I seen it happen? Yes. I went from 1,000 to 2,000 in about a week and a half, but I wouldn't, I would say lucky in the sense that the setups that I got into provided me with multiple 100% or more trades consistently back to back. So that was pretty easy for me to do, right? Now, let's say if I was looking to double that account and the market didn't really give me proper setups, right? Like last week, or not this week, but 2 weeks before, 2 weeks before, the market was kind of choppy, like the first 3 days out of the week, right? So if you didn't take any trades those first 3 days, now you only have 7 more days to double your account, right? That's pretty tight. So what I always would say is don't focus on the money. Always focus on your system and your process, and the money comes from that, right? Like when I took that account from 1,000 to 2,000 in a week and change, I wasn't focusing on, hey, I'm going to double this account. I just took my setups as I always did, and it ended up doubling the account in a week and change, right? Sometimes it can take a month, sometimes it can take 2 months. It really depends on what the market really wants to give, right? So I would stray away from focusing on the money and more so focusing on your process and your setups on how you're going to get there, right? And don't give yourself a time frame, because if you have 3 more days and let's say you have $500 to go or $1,000 to go and you're not really seeing a setup, you might start getting a little antsy and you might want to force trades to just hit the $10,000 goal. Again, we don't want to focus on the money. You always want to focus on your process, because that's where the money comes from, not from saying, hey, I'm going to turn this into double or triple my account in 2 weeks. That's certainty based thinking, which is going to get you into trouble. All trading is probability. And if you try to bring certainty into the market, you're going to have a really rough time. So I would avoid that if I were you. When I was doing, as I mentioned, when I doubled that account in a week and change, I was generally using the 4 hour and the daily time frame for setups. To answer that portion of the question. And if I'm taking a setup on the 4 hour time frame, I'm not looking at anything else under that, because I don't really care about what's under that. I'm just focusing on whatever the setup is in the 4 hour. Now, in the example that we went over yesterday about the 4 hour and like maybe going on the 5 minute for like an earlier entry, I don't do that. When I'm looking at the higher time frames, I'm really just looking at the 4 hour, the daily, if I'm going to be day trading it, right? Cool. So that's what I would really focus on. Just waiting for your setups to appear and just take them when they do. And obviously, risk management as always. Let's see. For those who are coming in a little late, whatever questions you want to ask, put it in the chat. Any question is cool. No dumb questions. Let's see. Yaya mentioned, when trading options, do you use market orders, or are you watching the chart and then buying contracts as it passes your entry? I usually use conditional market orders, in the sense of, let's say, as an example, let's mark off this 4 hour high on Tesla. Now, let's say I want to go long as soon as this price breaks, right? If we open up as an inside bar, I don't really want to be fiddling around with the order screen as I'm waiting for things to pop up. And also, I also maybe want to look at futures and see what may be happening there. So what I do, I use Thinkorswim. I believe you can do this on Webull as well. So what I usually do is this. I'll set up a conditional order. And if you don't know what a conditional order is, it's essentially an order that triggers with specific conditions. So in this case, this will be the conditional order that I set. Um, if Tesla is at or above, and I always do a 1 penny above the trigger. So in this case, 330.90, that anything above that is going to be the trigger. So 330.91, because I want to make sure that it breaks that price. So conditional order, if Tesla is at or above 3391, buy, let's say for the sake of the conversation, 3 call options at market, whatever that may be, right? So yes, I'm going to get hit with some slippage because I am market buying, but again, that works for me. I'm okay with getting hit with some slippage. Some people may not like to get into slippage, so maybe when it breaks that level, they might want to have the conditional order, maybe do like a limit at the bid or buy the ask. So it's like a specific set price as opposed to just a market price, which is going to be whatever the next best available price is, which may not be the best, right? But that's essentially how I do it. And then once I get into a trade, once my alert goes off that it actually broke that level, then I'll go back and, set an alert wherever my stop loss may be, where my targets are. That way I can just focus on futures. And then when my alert goes off, then I'll go back and then, adjust the trade from there, either stop out or trim some contracts off, things like that. So that's how I like to get into options trades. Now, if you're using, let's say, like the 5-minute or the 15-minute, I'm not going to have enough time to put all of this in. So I'm going to manually be looking to market buy into specific trades on those lower time frames. Or, of course, you could buy the bid or limit the bid or buy the ask, whatever you feel is best for you. I'm usually just buying the market with specific setups because the setups that I usually take, they're in-force trades, meaning that once it triggers, it should not be pulling back to entry. If it does pull back to entry, the probability of that trade decreases. And I've been left behind a bunch of times, so I'd rather just get in. And, slippage is just part of the cost to get in that trade as quick as I need to. Let me know if that helped. Flash mentioned, what do you use to mark out key levels? What do you mean by that? Like, what time frames do I use? What tools do I use? I can answer that in different ways. So Luckner, essentially, well, let me get to Flash's question, then I'll continue with the Infor stuff. So tools, again, there's many different things that you can use. Let's go to, I don't think I have anything marked on QQQ. So let's say some people might use, let's say like a daily high. That could be a key level. You could just use your line tool and just mark it off. You can even look at like previous week low as a potential key level. Some people might use fibs and mark off like a week high to the week low. Now you have fib levels on from the weekly time frame. So you can say, all right, cool. Maybe if the daily reverses, we might go down and touch the 50% of the prior week as a potential target, right? Things like that. So that's some ways that you can mark off key levels. Cool. Let's see. Yeah, Luck. So essentially, let's say, for example, like this 2-1 setup right here, right? This is a gap, but let's see if we could find one that triggered. All right, cool. Well, this one was a gap down as well. Let's see if we could find one. All right, so this one over here, right? We had this 212 up on the 4-hour time frame. We opened up down here. We ran up and just broke that high. So this is now an in-force trade, right? An in-force trade just means that once it triggers, it should just go straight to target. It should not reverse. It should not like come back to entry and then hang out for a while, come back down, then go back up. It should just trigger and then just go straight up to target, right? That's pretty much what an in-force trade is. If it triggers and then it comes back to entry, that is no longer an in-force trade, right? If you need like an analogy, I don't know, let's just say that you and I are running, right? We're like running with a lot of force. If we stop or try to or start moving backwards, we're no longer running in force in one direction, right? So the force has stopped. Hopefully that made sense. Sweet. Trading levels AB is more important than trading the full trend AZ. It simplifies trading. I think Luckner might use that, like the ABC stuff, from what I remember, from what you mentioned sometimes. Sweet. What other questions you guys have? Put it in the chat. Any question is fine. We can go over strategy, trading psychology, really whatever you guys want. What do I use for news? So I use Forex Factory and Market Watch. I'll post it in the chat. So Forex Factory, you want to be looking for the yellow, or well, really you want to be looking for the orange and red folders. Those are high impact. The yellow ones sometimes can be impact depending, what happens. But generally there's not much impact with yellow folders. I filter just US, so USD. So since I only really trade the New York session anyway, like for example, this Monday, there's no impactful news. Tuesday, let me actually just take a screenshot and then just post it here. So this is what we got for this week. So Tuesday, 8:30 a.m., our good old uncle Jerome Powell is going to be talking. Let's see what he talks about. We got the Richmond Manufacturing Index at 10 a.m. So if you are holding a position during that time, be mindful of this. Same thing on Wednesday. We got home sales, 10 a.m. Whoever's trading oil, you got to be mindful of this news right here. It's yellow folder because it doesn't overall impact the market. But if you're trading oil, it is 100% going to impact your oil trade. So be mindful of that. That is high impact for oil. Jobless claims basically every week at 8:30 a.m. We got PMI at 9:45 and then home sales at 10 a.m. And then on Friday, we have news at 8:30. So things to be mindful of when you're trading. So if you're ever in a trade at like 9:45 or 10 a.m. and then it just like shoots in the opposite direction and you're like, what the heck happened? News more than likely came out. And you always want to be paying attention to that. You don't want to be caught with your pants down, especially if you're in a big position. Yeah, I've seen that as well. Sometimes oil will, gold will react to oil news. Let's see. Kai. Well, Flash. So news is important for anything. If you trade futures, forex, options, regular stock, all that stuff, you have to pay attention to news, especially when Trump is talking. I do not trade at all when he talks. Let's see, Kai. What do you recommend for someone who keeps averaging down to save a trade? Great question. I personally do not believe in averaging down unless it's like a really long-term position that I'm investing in, right? But if I'm trading something, I do not average down at all. Once I get in, it's either yes or no. Sure, if you some people would get in, let's say like 70% of the position in the trade, and the 30% they can like leave to average down, but the stop loss stays the same. I don't really care to do that. I just put my full position in the trade. It's either going to win or it's going to lose. I'm already okay with whatever it is that it's going to lose if it does lose, right? So, um, let's see. You mentioned so you took Tesla puts on Thursday because it's a bearish pennant to the downside. Held the trade and you averaged down a few times. You saw too much red and gave up. It gapped up the next day. You lost $1,500. Let's look at Tesla. What time frame did you draw this bearish pennant on? Ooh, Parker. Great question. I'll answer it in a bit. 5 minutes after the drop on Thursday? Let's go to Thursday. When did you get into the trade? Did you get in like at market open? Did you get in like at the end of the day? What time did you get in on this trade? Did you get in like over here when this big drop? After that, after the two red candles. So pretty much after this big drop, you got into puts. Gotcha. Where was your stop loss and where were you targeting? And was the trade supposed to be a swing trade or was it supposed to be a day trade? And what expiration did you choose? What was your expiration date on that trade? All right, 1 DTE. And was it supposed to be a day trade or a swing trade? And what level or price was your stop loss? Gotcha. So, several problems here. Number one, I'm assuming you were going to hold the trade overnight until the next day. So, one thing that I will never, ever, ever do is hold Tesla overnight with a 1 DTE contract. You're asking for real bad news, which unfortunately had to happen to you. Number one, Tesla doesn't really care about news. It's going to do whatever it wants. Tesla is its own stock. While the market does affect it, it's still going to do whatever it wants. And you better pray that Elon doesn't tweet when you're swing trading Tesla, because if it's a bad one and you're in a long, good luck. That position is going to get obliterated. Also, different things here. Let's see if I remember how to even draw this bearish pennant. I'm assuming it's something like this, and then something like this. So different problems here. Number one, you're looking to overnight a trade on the 5-minute time frame. Let's look at the higher time frames. We pretty much closed as a hammer on the 4-hour time frame. The daily, if it closes a failed to up, so maybe I'll give you that to maybe a potential move to the downside. But yeah, the biggest issue here, in my opinion, Tesla, you don't like basically a 1 DTE trade. That's a gamble. It's 50-50. In your case, it ended up going the wrong way. So I personally would never ever swing trade or overnight a trade based on a 5-minute time frame. That's not giving me the proper, the full story of what I need for this trade. You always need to pay attention to what the higher time frames are telling you, especially for overnight trades or what have you. Because I can go on the 1 minute and be like, cool, there was a bearish pennant on the 2 minute or the 1 minute. Why did it gap up? Right? So, second thing is averaging down. I don't believe in averaging down in, like, as I mentioned, when I'm trading, because if I need to average down, that means that the trade is probably no longer valid. And if you are averaging down, not you, but generally, people tend to average down when they don't want to take the loss. They think, well, if I average down, it will bring my average down, and then I can get out at least maybe at break even with the new average price, or I could get out with a little bit of profit. What ends up happening? You just add more to a losing position. That's why for me, once I get in, it's either yes or no. It's either going to hit my stop loss or it's going to hit my target, and that's it. If I get into this trade, I'm going to risk $300. I'm risking $300. I'm not going to add more and risk $500 or $600 or $700 now because it's not going my direction. So I wouldn't even bother averaging down. Not only that, let's go back to Thursday. It pretty much just started chopping. So theta was probably obliterating your contract. So you were averaging down during chop. I wouldn't even bother averaging down during chop because there's no direction, right? Now, if price, let's say maybe move forward and made a new low of day, maybe I'll add more to the position, sure. But I'm not going to average down just because, like, price is chopping. Literally nothing is happening right now. So that's just money being thrown away for no reason, in my opinion. So what I would probably say if I were in your shoes, I would not average down at all. Just put into a trade and mark off, where you might be okay with losing X amount of dollars, and just do that and just leave it there. And again, overnighting Tesla specifically, you better hope you're on the right side of that trade. I only swing trade Tesla if I'm using like a Forex broker, or if I'm like swing trading shares. I do not swing trade options on Tesla. Cool. All right, let's see. What do we got next? By the way, for those who are just coming in, I require 50% participation. So if you haven't, hit the like button, thumbs up button, all that good stuff. That's all I ask for this free class that I have for you guys, and answering your questions. Yeah, we'll definitely look at QS in a few moments. Shout out to whoever got into QS with me a few months ago, up 200% or more, depending when you got in. Let's see, Parker. Any tips on trusting setups? I see a bullish reversal, but exit once I see any red to take little profits instead of holding to my target. So several things here, Parker. Understand that as humans, we are not trained to be in this uncertain environment that is trading. So when we're in trading, our brain does not like uncertainty, and everything about trading is just probability based, which our mind does not like. It likes certainty. It likes yes, no. It doesn't like maybe. So let's say you're in a Tesla trade. Let's say you're in this one, right? And you're in long. You get this little pullback here on the 5 minute, which is normal, right? People are going to take some profits. If you're getting emotional, understand that this is a natural defense mechanism from your brain because, one, if you're using real money, your brain does not like to risk things, especially when it comes to your survival. For example, if you and I were back in caveman days and we saw, let's say, a bush start to shake, we're not going to be like, oh, cool, it might be a rabbit. Let's just hang out and chill. Where our brain is probably going to go into super fight or flight mode and be like, that's probably a bear, a saber-toothed tiger, something. I'm out of here. We're immediately running, right? Understand that your brain has evolved to do that, to protect you against risk, which it does not like. That's why as a trader, you need to train your brain to be a trader's brain as opposed to the human brain, right? The trader understands that risk is inevitable for this business. If you do not like risk, then trading is not for you because you're always going to be risking something, right? Some things that can help with that by letting the trade actually play out and trusting the setup. Number one, as always, journaling and collecting data. If the data has a proven track record and back testing and even forward testing on demo, then when you use your real money, then you understand that you have the proper data to substantiate that this trade is going to win more than it loses. Second, you also want to, if you're focused on, if you like get scared, several things that you need to do. Learn emotional regulation techniques. Second, you want to set your alerts and don't look at the screen, because if the screen is triggering you to get emotional and mess with your trade, then you need to not look at the screen. Literally set your alerts wherever your target and stop loss is and go do something else or turn off the screen and wait. The biggest thing as a trader is waiting and patience. You wait for your setup, you get in, and then your only job from then is just to wait some more until something happens. When you start messing with the trade, that's when you get into trouble, right? I used to do the same thing a long time ago. And it wasn't until I wrote down every single trade that I did that on, I gave up like $10,000, $12,000. I'm like, all right, this is literally the amount of money that I gave away because I'm messing with my trades. I have to stop this, right? So in your case, turn off your P&L if that does trigger you. If you get triggered during a pullback, set your alerts, stop looking at the screen and go do something else because there's nothing else for you to do once you're in a trade. You're just waiting, right? So try that, or not try, do that, and then you'll see how your results are going to change. Because what happens is you get scared, you take a little bit of profits. But then if price is red, instead of taking a little loss, we tend to hold on and take a big loss. We start to hope, right? Oh, it might turn around, it might go in our favor. Hope is not a strategy, so don't do that. Let me know if that helped out and if that made sense. Is it safe to trade continuations or look for pullbacks? Example, Tesla on the daily time frame has only two continuations. That's really up to you. Yeah. I take continuations as well as reversals on Tesla on the 4-hour time frame. Absolutely, Parker. Definitely let me know your progress. So yeah. Again, continuations or reversals, it's really up to you. I usually focus on reversals, but generally for the 4-hour, I'm just taking any generic continuation if it looks good to me. Cool. All right, let's look at QS. Good old QuantumScape. Lovely. All right, we're looking at QS. What are we looking at? Luckner. So for Tesla, for my targets, I use a combination of strat targets, like previous highs and lows, fib targets, ATR targets, things like that. Because sometimes there'll be like a strat target that's like $8 away on Tesla. I'm not holding $8 for Tesla. I'm taking profit as it goes in my direction. Because Tesla loves to reverse on you immediately sometimes and never come back. You're in long dated puts on QS from two different analyst callouts. Interesting. Let's all look at the chart on when did I call out QS? Bro, I need you to pay attention in the long term and dividend channel. I think it was last Q4. Let's see. So October 1st, I bought some QSF 545 of last year. My first buy of QS was back, it looks like August 2nd of 2024. Actually, that's a negative. That was actually my second buy. Looks like my first buy was in June of last year on the 23rd. It was trading at about $4.95 a share. So I got in some, and then 2 months later, that's when I got some more and told you guys more about it. Definitely was a good one. This to me was more of a fundamental trade, not really like a technical trade, because I like solid state battery technology. And I'm like, well, it was what about, like around, it was around, what was this? It was back over here. Yeah, it was around these levels here. Then we got that big pump up and then it reversed back down. And then I added some more later on in October and August. And we got in originally like over here. Now, for me, I'm willing to risk 30-40% loss on this trade. And we were already at all-time lows. And basically, to me, just a fundamental play. Later, luck. We'll talk tomorrow. So me, it was just a fundamental trade. I'm like, well, solid state battery technology is going to be amazing if it as it develops more and replace our lithium ion stuff that we got going on now. And I was like, hey, let me put some money in it and see what happens. And we finally got rewarded for our patience. To answer your question, Kai, so Kai, I don't necessarily do call outs per se. Like I'll alert stuff like in my group. You're welcome to send me a message on Discord and I'll send you a link. But I'm generally just using the watch list. And then if I see something that's worthwhile, then I'll like make actual, like, hey guys, I'm looking at this to get into. Pay attention. So you're more than welcome to do that. To answer your question about you being in long dated puts based on other analysts, um, let's do a group exercise. Can anybody looking at this chart tell me if they see any short setup anywhere here? Let's do good old top down analysis. You were in since $10. Godspeed. Let's do some top down analysis. The quarterly time frame reversed basically this month. Quarterly bullish. Yearly bullish. Yearly bullish reversal. Quarterly bullish reversal. I won't really count the weekly, but all the higher time frames, super bullish. The analyst said the RSI is over 86 on the daily and it should reverse after. This is a wonderful moment for me to clown on the RSI indicator and why price action will always be RSI. Just because the RSI is at 86 doesn't mean anything, in my opinion and experience. I used to use RSI a long time ago. I don't use it anymore for obvious reasons. Just because RSI is at 86 doesn't mean that the stock is not going to go higher. And here's some extra additional things for QS on why it's going so crazy so fast, right? Number one, we've pretty much been accumulating in the $6 to $4 range for how long now? A year, maybe 2 years. We've been accumulating in this range. Big money collecting a lot of buy positions down here, making it boring so we will get out of it. So several things are happening here. Finally, the big money wants to actually move it now that they got their position. Second, people who are shorting this are essentially causing a short squeeze. So whoever's buying puts, whoever's shorting the stock is adding even more fuel to the fire of the bullishness of QS. Even in one day, we probably had a lot of shorts over here on the 16th because in one day we went up like 20%. So I personally would not be in any shorts at all because nothing about this chart is telling me to go short. Bourne gave some RSI stuff there. I don't use it, but you can look into what he mentioned. So I wouldn't be looking to short this at all. I would only be comfortable shorting it maybe if the daily reverses, but even then I'm not going to short it because we have big fair value gap in this area here that might get bought up and send it higher. So I am definitely not looking to short this at all. That weekly candle is ridiculously strong and we closed above this entire area over here. So if we don't get rejected in this area up here on like 15 and change, whatever buyers or whatever sellers were hanging around on $14 got obliterated on that last weekly candle. So I wouldn't be looking for any shorts at all in the slightest. And that's my analysis on QS. Whoever's still in, congratulations. Buy me some Wagyu steak. The only other stock that I'm waiting for to pop off, do I recommend to cut it? I would have cut that trade a long time ago. That's all I'm saying. If it's within your risk tolerance to hold it longer, hey, go for it. But I would have cut that trade a long time ago. Let's see. The only other trade that I'm really looking at long term right now is UWMC. For those who don't know what UWMC is, it's pretty much a United Mortgage, United Wholesale Mortgage, the second largest mortgage lender in the U.S. They're trading at about $4 and change. And the number one mortgage lender is Rocket Mortgage, which is trading at $14. In my opinion, with UWMC being second contender, they should not be at this price. What I think is that big institutions and big money are keeping the price low because they do not want price to go up. They want to get as many cheap shares as they can. And they pay you a dividend of 40 cents a year. So at these prices, it's like a 7 to 8% dividend return just off the shares. So right now, I think it's like 9.5% of my portfolio. I'm looking to increase this to 15% of my portfolio. I have some buys at $4 and I have some buys at about $3.80, $3.85 if we get there. So I'm just hanging out. Keep in mind that this is related to housing. So interest rates do affect this stock. Once interest rates go down, whenever that is, I will be expecting this to go back up whenever that happens. And I will patiently wait. As always, never invest money that you're willing to lose. I'm okay with losing a bunch of the money that I have in here. That's a risk that I'm willing to take. And I get paid in the meantime as I wait for that to happen. We'll see. Cool. What other questions do you guys have for me? And for those who came in a little late, whatever you want to ask, any questions at all, put it in the chat. Open is going crazy. Is it still worth it to get into calls? Let's check it out. Oh, rest in peace, whoever was shorting that. So first and foremost, I don't trade options on penny stocks, so I wouldn't even get into any calls at all for this. The IV, let's check. Let's see if we can see some options on this. Where is the options? There we are. If you were to get into options, what expiration date would you choose? September. All right, let's look at September. Obviously, we're looking at calls. Let's look at the options chain. What's the IV at? Wait. IV is 300%? Hold on. Let me bring this up on Thinkorswim because TradingView is weird. Yeah, so IV is 296%. I would absolutely not buy any options on this at all. Because once it starts slowing down, IV Crush is going to obliterate that contract. Even if we go down 100% on IV. Oh, well, IV was right here the whole time. Duh. Where I'm missing some things on the chain. Where's the Vega? Oh, there we go. Vega is negligible. They don't have volume and open interest. That's dumb. Long story short, negative. I will absolutely not get into this at all. Price may continue higher. Maybe it'll get short squeezed. Who knows? A hedge fund called them out. I will definitely not get into this because a hedge fund called it out. That's a trap if I ever saw one. One thing you want to be mindful of penny stocks is that you want to see if any penny stocks that you're trading have any shelf offerings, because you don't want to be in a big momentum and then an offering comes out of nowhere and then that stock price gets obliterated. So when I trade penny stocks with my first mentor that he taught me, we would always do fundamental analysis on the stock, and then we'll be looking for technicals to get into the trade and then just wait until something happens. But yeah, this candle is insanely bullish. Maybe look for a pullback on the daily or the 4-hour. Maybe we come back down around 150, 160, 170, and then keep on going up, do a little TTL on the daily. Who knows? You can get into continuation if you want. I don't really care for it personally, but that's just me. Let's see. You also know a bunch of SPY puts are being bought by whales for September, October expiry, so not sure if I should buy any calls. The W on UWMC, not the cleanest W. Oh, the quarterly. Whoops. Let's turn these off. Wow, I definitely did not notice this in the slightest at all. Thank you, sir. This will be beautiful. I'm even more excited now. Let's see. You know, there's a bunch of SPY puts being bought by whales for September, October expiry, so not sure if you should buy calls. So what I'm getting from you, Kai, is that you need to learn price action in general. I personally don't use flow, even though it is helpful. But you don't want to just go off flow, right? Not only that, from my understanding of flow, it doesn't necessarily tell you what the trade is for, right? Like if they're buying a lot of puts, is that like a hedge? Is that a what's the word? Is it a hedge? Is it part of a spread or something else? Who knows? But not only that, let's look at SPY. This is SPY on the monthly time frame. Does this look bearish to anybody? This is the monthly. This is the weekly. Does any of this look bearish to anybody? Would you be buying puts right now? Yep, definitely not. Will not be buying any puts. Just because something is at an all-time high and you think, not you specifically, Kai, but in general, just because something is as an all-time high and you think it shouldn't be there, doesn't mean that it should go down because you think it shouldn't be up there. I try to time the market, I think like 2021. Yeah, like for a few months, I was like, oh, the market can't be this high. COVID and inflation and all these things, we should be heading lower. And I lost a lot of money shorting a bullish market when I could have just making money going in one direction. So yeah, I could definitely see some exhaustion coming up. Probably have some BFs that we're rejecting off of or about to be rejecting on. Welcome, Brown. Shout out Brown Strat one of my strat mentors. Great guy. One thing that I'll probably recommend you do, Kai, definitely look into um, learning technical analysis so you can properly read charts as opposed to, like, yes, as I mentioned, flow is good to pay attention to and use as more confluence for whatever it is that you're looking at. But you also want to be able to properly read the charts in and of themselves, right? So let's say if I'm looking for a short setup and let's say it's about a trigger, let's say tomorrow, if it might trigger tomorrow. And then we might have some potential bad news this week, or there's a lot of flow coming in, as Brown mentioned, let's say for this Friday, and I get a nice short setup to swing, that can give me additional confluence for the trade, right? But I'm not going to buy shorts just because flow is saying they're buying a lot of puts, right? They might even lose on that position. They have millions of dollars to lose. I know I definitely don't. So I would say as well, Kai, when you said that you're not sure if you should buy calls, if your setup says to buy calls, then just do whatever the market is telling you, right? If the market's telling me to go short, I'm going to go short. If it says go long, I'm going to go long. That's how I like to trade. I just follow whatever the chart is telling me, and it's done me extremely well. Yaya asked, do you use a scanner? I'm trying to create my own watch list, but struggling to find/identify actionable signals. Most tickers seem to be in continuation. That's perfectly normal. Yeah. Remember, for specific setups, like if you're looking for reversals or what have you, or even inside bars, they might not set up every week. They may not even set up every day. Kind of just have to wait until it appears. I mainly use the Thinkorswim scanner where you just plug in. I forgot who made it. If you need the scripts, let me know and I'll post it in the chat. You just have to tag me in Discord and I'll post it. But yeah, I usually use the Thinkorswim ones. It basically tells me if there's a one bar, like a 2-1 setup on the daily, weekly, monthly, whatever time frame I'm pretty much looking at it on. Cool. Yeah, Kai, whenever you're ready, just send me a message on Discord and then we can talk more about it. That way I can teach you everything I know and you can be taking your own proper trades and make money the right way. And yeah. Right now, there's a lot of just momentum heading to the upside. On SPY on the daily, there was a nice little hammer here. So whoever got calls on Thursday, and it had like almost no pullback at all. And it gave you that opportunity, opened up as an inside bar and triggered up. Let's check the 30-minute. That was on Thursday. Yeah, pretty much soon as it broke that hammer on the daily, the on Wednesday's hammer, just straight up little pullback, little TTO right here, a little hammer doji to keep going. Nice. All right. Take another question or two and then we'll wrap up. So whatever the question you guys have, put it in the chat. Let's talk about it. Does Brown Strat King have a YouTube? I don't think he does. Do you, Brown? I don't think I've ever seen your YouTube. I know I've seen your Instagram. I don't. But as far as I know, obviously Brown can answer for himself, but I think Brown doesn't. He's not like on social media that much, at least from what I see. We're usually like talking in groups and stuff like that. That works. Yeah, some of the classes that we'll have, uh, Brown will be in them that I host and stuff. So you'll usually catch him around with us. And whoever's in my group or 100K's group, the Hungries, we usually have chart and well, not usually. We have chart and show every Saturday, 11 a.m., where we all come together and talk and stuff. What would be the best volume indicator to use? I can't seem to read them to make trades. I don't use volume, as you can see my chart. For those who do use volume, definitely let Kai know in the chat and what works best for you. Also, Kai, if you're still practicing like your own trades and things like that, definitely paper trade. Don't use any real money right now. Because you don't have any proper consistency and you don't want to lose real money as you're still learning. What advice would you give to trust entering on higher time frames and being in the expansion and not worrying about going to real low time frames to get shook out? Oh, great question. So, in my opinion, if I'm going to be looking at a higher time frame, like the 4 hour or the daily or what have you, or even the 1 hour for a setup, I'm not going to bother looking at the lower time frame because one, you're probably going to get shaken out if you start seeing like a bunch of reversals and things like that. Let's say, for the sake of the conversation, what is this, Wednesday? So this Wednesday at 1:30 off this inside bar on the 1 hour. Let's go on the 5 minute. All right, so pretty much all of this like consolidation is an inside bar on the 1 hour. Well, let me zoom in a little bit. Once it broke right over here, we pretty much went 2-1-2 up continuation on the 1 hour. However, you can see the 5 minute is reversing here. Then you can also see we're pulling back here. I always encourage you guys to stay on the time frame that got you in because as you can see, looking at the 1 hour, it literally just kept on going 2 up. It never reversed on you. So there shouldn't be any reason to even get out of the trade, right? The 1 hour is going to be stronger than what the 5 minute or the 1 minute is telling you. There's going to be a lot of pullbacks and reversals on those time frames because that's, price is just naturally going to be reversing and things like that. So when it comes to trading off higher time frames, just focus on those and see what it's telling you. Now, if I get in on the 1 hour and it starts to reverse on the 1 hour, then I'm probably going to get out, of course, depending on what the setup is telling me and things like that. Did that answer the question, Brown? Sweet. Kai, I lost 15K in total now. Following analyst and over leveraging, definitely my fault. We'll go back to paper trading. So I really wish like trading had like an instruction manual, which kind of it does. As you guys always see on my watch list, I always tell you guys. Let me get a screenshot real quick. As you can see on my watch list, I always post this at the very bottom. Size accordingly and have a proper trade plan. Especially if you're new and you're taking signals, you always want to follow risk management. You don't want to lose a ton of money because then what's going to happen? Let's say you start with $10,000 in you're following signals. Let's say you go to like 12,000. You're like, cool, we're doing great. Let me size in even more. What happens? You start taking bigger losses, and then now you're negative from where you started off at. So what do you do to compensate for the bigger losses? You probably get even bigger positions to make up for the losses, so you can at least maybe be break even or at least green from where your account started at. That's a huge mental trap that's going to get you in trouble. Happened to me, and I would want you guys to avoid it as best as you can. I haven't taken signals in a long time. Sometimes I'll look at ideas that like a mentor will throw out and I'll see if I like it, then I'll like formulate my plan around that. But I wouldn't just take it just straight off what they're saying, even though it works a lot of the time. Just because I don't know the full ins and out of what they're looking at. So I need to have my own plan with it. So I'm fully comfortable with taking the trade. So if I were to be a new trader and I'm looking to take signals, and let's say I had a good understanding of risk management, and let's say I have a $5,000 account, and I would probably start with putting $200 to $300 into every trade that's called out, and then slowly build the account from there, right? I like to use the system of like percentages to compound the account. For example, whoops. Let's make this text a little bigger. So let's say you have $5,000 account, and I'm going to use, let's say, 5% of account per trade, which would be $250 per trade, right? Now, let's say I am at 6,000 now. So I grow account to 6,000. So now, still using the same percentage system, I can go from 250 a trade to 300 a trade. And then I can slowly compound my account and get used to the bigger numbers in profit and loss wise, but it's not so big that I'm getting extremely destroyed mentally. And of course, my account as well. Like I'll see people going from like 200 a trade and then they do really well. Then they go to like $1,000 a trade, right? You're excited and you're happy and you're ready for all these big profits, but mentally you're not ready yet for the big losses. So what ends up happening? You get into a signal with 20% of your account and you're ready to make the $2,000, $3,000 and this and that, but then you're down $500. You never seen that loss amount before. So now you're not used to it. You're like, well, it's $500. Let me hold on to a little longer. It can probably reverse. And then you hold on even longer to a losing trade, and then you lose 100% of the position, losing 20% of your account in a single trade, right? So to me, the percentage system, as you use your account and grow it, is the best, in my opinion. So this is how I would probably tackle taking signals if I were brand new, and then slowly compound it. And if you, for whoever, not you, Kai, but you and whoever else is listening to this, if you've been trading for a while and your account is doing bad because of signals, you may want to take note of the signals that either don't work out that much, or focus on the ones that work out the most and just stick to this a manageable amount per trade, and then slowly build it up, right? Because we tend to get impatient and we want all those losses back in a month or in a week or in 2 weeks or whatever. Again, patience, right? I'm pretty sure most of us are going to be trading for the rest of our lives. What's another 3 months by slowly building your account back up, or even a year, right? I've been doing this for 5 years and a month now. And patience has been one of the greatest things that I wouldn't say that I've mastered patience, but I am really, really good now at being patient. If my trade doesn't set up, I will literally not take a single trade in a day or even 2 days if it's not even there. So patience is really going to help you a lot in this business. And if you are new and you've been doing this for a year or less, don't beat yourself up if you still don't know what you're really doing, right? There's a lot that comes into trading, and this is a skill as any other skill. And that's pretty much all I have. Before we wrap up, let me know what everybody's biggest takeaway was today. So, whatever you learned today that was new, whatever stood out to you the most, definitely let me know in the chat. And then from there, we'll wrap up. Whoops, I knocked my headset or my microphone. Sweet. Sounds great, Kai. I'll be looking forward to it. Yeah, Keb. I have how many shares do I have? I gotta double check. I know I have more than 600 shares or 700 shares. Hey, Flash. Yeah, definitely send me a DM and we can talk about the mentorship and how I can help you. And we'll go from there. My DMs are always open. You can also, if you don't, for whoever's watching this and doesn't know me on Discord, you can definitely check the description. I have like all my links there. You can email me at ceruleanmindacademy@gmail.com as well. All that good stuff. Thank you guys as always for coming out. Love this stuff. Love talking to you guys. And I will see you guys for the next one. Enjoy your weekend, and I will see you guys next week. Take care. Of course, Parker. Thanks for your questions. Later, y'all.